Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance to help you make informed decisions about your investments. As we approach the end of the year, it's essential to take a closer look at your portfolio and consider making some adjustments to optimize your investments. In our first segment, we'll be discussing 3 crucial portfolio moves that investors should make before the year comes to a close. Firstly, it's vital to review your winning positions and consider taking some profits to bring their allocation back in line with your overall investment strategy. This can help you lock in gains and avoid overexposure to any particular stock or sector. However, it's also important to be mindful of the tax implications of selling your winners, as this can generate capital gains that may impact your tax liability. To mitigate this, investors can engage in tax loss harvesting, which involves selling losing positions to offset the gains from their winning investments. This strategy can help reduce your tax bill and make your portfolio more efficient. Nevertheless, it's crucial to be aware of the wash sale rules, which prohibit repurchasing a sold stock within 30 days to avoid any potential issues. Lastly, once you've trimmed your winners and harvested your losses, you may find yourself with some excess cash in your brokerage account. This presents an opportunity to rebalance your portfolio by investing in new stocks or adding to existing positions that align with your investment goals. It's essential to approach this process thoughtfully, considering the current market conditions and the potential for future growth. By taking a proactive approach to managing your portfolio, you can help ensure that your investments remain aligned with your long-term objectives and that you're well-positioned for success in the years to come. Whether you're a seasoned investor or just starting out, it's crucial to stay informed and adapt to changing market conditions. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of retail and economics, where Walmart has just absorbed a significant blow from soaring fuel costs. The company took a $175 million hit in its first quarter, but instead of passing on the costs to consumers, they chose to shield shoppers and build loyalty. This strategic move seems to be paying off, with Walmart experiencing its strongest transaction growth in 6 quarters. However, the company's CFO, John David Rainey, has issued a warning that if the current elevated cost environment persists, they expect to see higher retail price inflation in the second quarter and the second half of the year. This means that shoppers may soon feel the effects of global energy shocks directly at the register. It's interesting to note that Walmart is prioritizing value and expanding its discount program, currently offering approximately 7,200 rollbacks across its assortment, a 20% increase from last year. The company believes that investing in lower prices remains the best return on its capital, especially given the pressures on consumer wallets. Walmart's strong top-line performance, driven by a 26% surge in global e-commerce and a nearly 50% jump in U.S. marketplace sales, has provided the financial flexibility to stomach fuel shocks. But the question remains, how long can they keep absorbing these costs without passing them on to consumers? As we consider the potential impact of inflation on the retail sector, it's essential to remember that companies like Walmart are not immune to global economic trends. The effects of energy price volatility can be far-reaching, and it will be crucial to monitor how retailers respond to these challenges in the coming months. Welcome back to the Riskwiser Zone. We're closing out today's show with a look at the latest developments in the global markets. As you may have heard, there are rising hopes for a peace deal in the Middle East, which has led to a surge in investor optimism. The dollar has been nursing losses as a result, although fresh U.S. attacks on Iranian targets have tempered sentiment. According to reports, Iran's top negotiator and foreign minister are in Doha for talks with Qatar's prime minister, aiming to strike a deal to reopen the crucial Strait of Hormuz. President Donald Trump has stated that talks with Iran are going nicely, but warned of further attacks if they fail. The U.S. Central Command has also carried out fresh strikes designed to protect troops from threats posed by Iranian forces. The euro has held on to its gains, trading at $1.1636.5, while the Japanese yen has fetched 158.95 per US dollar. Markets are pricing in some optimism, but analysts caution that a durable de-escalation is still uncertain. The real test, they say, is not the headline deal, but whether tankers can move freely, insurance premiums can fall, and energy flows can normalize. Oil prices have also been affected, with Brent crude futures rising 1.5% to $97.76 per barrel after dropping 7% on Monday. However, analysts don't expect energy prices to return to pre-war levels anytime soon, even with a near-term resolution, as supply chains will take time to normalize. As we wrap up today's show, it's clear that the situation in the Middle East remains complex and volatile. While hopes for a peace deal are rising, investors should remain cautious and keep a close eye on developments. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.